Well, Kalama Chemicals fits perfectly well into the strategic transformation that we are undergoing because Kalama, with around about 500 million in sales into flavor and fragrances, food and beverages, and for these end markets, we see a continuous growth in the years to come, high margins, high cash conversion. So it's the perfect fit with our portfolio going forward.
Matthias, you have a very strong track record for M&A, for integrating businesses quickly. What should investors expect in terms of synergies and EPS accretion for this deal, and where specifically will the synergies come from?
Well, the synergies will come 1/3 from top line because both businesses are very complementary in nature, so it's a perfect fit, and 2/3 will come from cost synergies because we have a global sales force in which we can basically onboard the Kalama products and applications, so it's extremely synergistic from top line cost perspective. And for that very reason, the deal is in itself highly financially attractive. We will be on a reported EPS basis accretive from day one. And the synergies we are going to get over the next 3 years are substantial. It's around about 30% of the existing profitability, i.e. we will gain around about 30 million bottom line profit expansion, which is based on around about 100 million of EBITDA that the company is able to achieve standalone. So we will really transform this business into a high margin business, 20% plus, and therefore it will be a strong fit with our portfolio going forward.
Sir, another area that investors are interested in is that with respect to your JV with Standard Lithium. And I understand that you will be making a formal decision on this particular JV, hopefully in 2021. What can you tell us about where things stand now, and at what point can you expect, if the JV does go full steam ahead, for it to be earnings accretive?
Well, you are very well informed. Standard Lithium, the project we are contemplating here, is of course something that where the technology is still being tested. It's innovative technology, and should this technology work, we will most likely find that out in course of second quarter this year. And this is a free option. I mean, the potential that we would have through then building lithium extraction units and building then an entire new market for ourselves. Lithium is a wanted raw material. I think not only Tesla and Elon Musk would be rejoicing when they hear about the success of this project. It would be the greenest lithium that would be extracted on this planet, and therefore we think that this free option would be a great opportunity going forward. It would definitely change also further our face of the company in terms of financial matrix, etc. But first of all, the technology needs to be tested in the next 3 to 4 months, and then we will report to you most likely in one of your television updates every morning.
Well, we're looking forward to that for sure, especially if you come to us. Just one final question I want to ask you about. You mentioned raw materials. Are you having any issues sourcing raw materials, particularly in light of the pandemic? We talk a lot about supply chain bottlenecks that have emerged.
It's definitely something that has to be on the radar of any process industry company these days. I'm fortunate to say that we have a procurement logistics organization that is, regardless where they are, home office or in headquarters, are active 24/7. And so far our supply chains have not been disrupted, neither in 2020 and currently in Q1. We also see that things are operationally fully on track, but we see that this is an issue for the industry, but touch wood, so far we dealt with this in an extremely professional way.